Looking at the monthly chart, the macro trend displays a powerful, long-term bullish structure. For the vast majority of the preceding months, our green 8-month moving average has sustained a clean position above the red 21-month moving average, confirming that macro momentum remains firmly in favor of the bulls. This structural uptrend is heavily validated by dominant buying pressure across both price and volume. On the main chart, green bullish candles heavily outnumber and dwarf the red bearish candles. Looking down at the volume bars at the bottom, we see the exact same pattern. Green buying volume consistently outperforms red selling volume, proving systematic institutional accumulation on a massive scale. The price profile on the left highlights a massive accumulation base. Price spent approximately 3 to 4 years consolidating within a well-defined horizontal range between 500 and 800. This prolonged consolidation built up prominent high-volume peaks on the profile, representing a monumental launchpad of energy where supply was thoroughly absorbed. The definitive structural breakout finally occurred when the price surged above this multi-year range with a long, high-momentum green candle. To execute this setup safely, our entry point is established at approximately 970. This entry timing deliberately aligns with the opening of the second candle right after the breakout, confirming the validity of the move. For risk management, our stop loss is placed at around 870. This is anchored to the midpoint of the price action to protect our capital. This structural placement provides the macro trade with proper breathing room just below our entry while keeping our downside risk strictly defined.
Instead of a single target, we plan a highly strategic, 3-tiered scaling exit to lock in profits along the upward expansion. We will take partial exits right after extended green candles or at stalling pin bars at 3 distinct levels. First at 2,700, second at 3,200, and a final runner exit at 3,600. Let's break down the exact mathematics from our entry to our final target. By entering at 970 and holding to our final exit at 3,600, our total maximum reward is a massive 2,630 points. Meanwhile, with our stop loss anchored at 870, our total risk exposure is strictly limited to just 100 points. When you map this out, it leaves us with an exceptional final 1 to 26.3 risk-to-reward ratio. This level of extreme mathematical asymmetry combined with a scaled take-profit plan is exactly how we maximize macro breakout setups while mitigating trailing risk.